what scenarios, in your opinion, would have to develop in the region and in terms of the geopolitics and the supply side risks for oil prices to hit $100 a barrel?
It's very difficult to see that under any scenario at this stage. There is a lot of oil around that can come to the market in a very short period of time. And at the same time, we see, for example, China's oil inventories are at record high. They are at the highest level in history, and that can be released within hours. So it's very hard to see oil prices going up that high, even if we lose all the Iranian oil exports, which is about 1.7 million barrels a day. So it's very hard to see $100 oil under any circumstances. In fact, I am even surprised to see oil prices going up by 9%. I thought they will go up by about 4 to 5%. Probably they will go down very soon once people realize that the oil market fundamentals have not changed. And any reaction from Iran is not going to be related to the oil industry at all.
So you don't believe, Anas, that shipping is going to be targeted by Iran, and how vulnerable, therefore, are vital choke points like the Strait of Hormuz?
Let's kind of be real about the Strait of Hormuz. First of all, most of it is in Oman, not in Iran. That's number one. Number two, it's wide enough the Iranians cannot close it. The third one is we have all kinds of navies, from the United States to British navies to the Indian Navy, and there are many navies in the area. The other thing is Iran depends heavily on the Hormuz Strait. Most of the stuff the Iranians eat on a daily basis basically come from the Strait, including vegetable oil. So it's not in their interest basically to cause problems because they will suffer first. The other thing is when it comes to the Iranian exports, their friends will suffer more than their enemies because they export to their friends. So it's very hard to see that happening.
But you would admit, Anas, that it's also very hard to forecast how long this latest geopolitical episode lasts. And it looks like Israel is clearly determined to remove what it sees as an existential threat coming from Iran's nuclear capability. This is a sustained operation. So within that period, isn't there scope for some great volatility in the oil market? And how do you see that evolving?
Yes, but what's clear here, in fact, let me put it differently. I wrote an article, the title of it is The Endless Iranian Nuclear Crisis. That was written in 2007. So this has been going on for a very long time. And the objective of Iran is not to be involved in any major war or full war, because the final objective is to get the nuclear bomb. And therefore, we might see a retaliation. It will be limited, and they want to focus on the bomb, because once they have that bomb, everything is going to change.
So you believe, and it's your conviction view, that there is enough oil in the reserves and in inventories because of these global growth concerns that can cushion any geopolitical supply-side episode, that you feel also, Anas, that it's going to be relatively limited, even if it does come to that?
Yes, in fact, again, I mentioned China because the Chinese been good at this for the last 10 years. At the same time, we have the group of 8 in OPEC+. They've been increasing production production ceiling at 411,000 barrels a day. Now they have to decide on August, and most likely they will increase production again by 411, and probably under the certain geopolitical conditions, we might see Saudi Arabia and UAE in particular increasing production more than that.
So in the short to medium term, are we looking at oil prices perhaps climbing by another $5 to $10, if at that, to reflect this evolving geopolitical risk premium, given this action by Israel against Iran, and then we see stabilization?
That's very hard. I think the effect, we've already seen the effect. Probably this is the maximum. 75 right now for Brent. Is that the impact of those events. We have low economic growth worldwide, and unless we see major trade deals taking place and economic growth picking up again, it's very hard to see even oil prices going to 85. I'm talking about Brent here. So given the these circumstances, we might see even prices declining from 75.
Anas, that said, if we go back in recent history, we saw how the Russian action against Ukraine, the invasion, and then the sanctions on Russia created the conditions in the oil market that really led to that spike in inflation, and it became globally disruptive. Do you not feel that it could happen again?
Well, in case of Russia, the general conviction throughout the world by politicians and traders that we will lose 3 to 5 million barrels a day within a very short period of time, and there was no replacement. Now the loss is only, the maximum loss is 1.7, and we do have plenty of resources and replacement. So the circumstances are different. The other thing is we still have the strategic petroleum reserves. The strategic petroleum reserve being built since last year by about 55 million barrels a day in the United States, and they can use that too. So we have plenty of sources to prevent oil prices from spiking.